Good morning, ladies and gentlemen. This is Butch Shorek. It's Monday, October 7th, 2013. Welcome to Market Forecast with Options University. Access to this video is for educational informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit. As always, do not trade with money you cannot afford to lose. Now, let's take a look at the week that just took place. Looking at the Dow, the NASDAQ, the S&P 500, the Russell 2000, what is it that we see? Well, we see stability taking place in this market in spite of what's going on the national scene. We see the Dow down 1.2%. We see the NASDAQ up 0.7%. We see the S&P 500 down 0.1% with its rally on Friday. And we see the Russell 2000 up 0.4%. Look at these year-to-date returns as we see a lot of stability there. The Dow up 15% for the year. NASDAQ up 26.1%. S&P up 18.5%, and of course the year-to-date percentage for the Russell 2000 up 27%, leading the way of all the markets. That old story of go away in May didn't fit this year. Now, what happened during the last week? Well, there were a number of positive things that took place. In spite of the government shutdown, there was really good stability in the market. It actually basically went sideways. We haven't had any price increase in gas for the last 30 days, so that's pretty impressive. Chicago PMI was greater than expected. The ISM, which came in last week, was up and better than expected, and it was the highest level that we've seen since April of 2011. And when we look at the Japanese PMI, we see that it was up the highest it's been since February of 2011. On the negative side, the government shutdown still continues, a little bit difficult on those companies that are depending upon government contracts, as we have that slowdown taking place because of government spending. Mortgage applications were down 5 out of the last 8 weeks. ADP was down, did not meet up to expectations. The job market basically just doesn't look all that great when we looked at the month of September. Initial jobless claims were up for the week as we looked at those on Thursday morning, and the China PMI was lower than expected, so not seeing that big growth in China. So pluses and minuses in the market always moves up some kind of wall of fear. Looking at what we got coming for the coming week, we see that Monday we've got basically nothing. Looking at Tuesday, we see we have international trade at 8:30 before the market opens, and that's basically the extent of what we're going to see on Tuesday. Looking at Wednesday, not a whole lot going on as far as the market movement. We do have the FOMC minutes taking place at 2 o'clock on Wednesday. In general, we don't see those moving the market all that much. Thursday morning, we have our typical jobless claims coming out before the market opens at 8:30. Import and export prices also coming out at 8:30. So a little bit of news on Thursday, with the rest of the week looking a bit dead. And then Friday, we have our big day of the week where we see PPI, we see retail sales, we see consumer sentiment, and we see business inventories. All those taking place on Friday. So all the news this week takes place at the end of the week. Looking at the SPX, when I talk about stability, yes, we had our huge move up from August right up through the middle of September. Then we had our pullback, but look at what took place last week. In spite of the market, the government shutdown, this thing has done nothing but go sideways. Now, out at the tennis court today, someone said to me, oh, the market's gotten hurt by this government shutdown. Heck, we're so close to all-time highs. In fact, when we look at the NASDAQ, we'll see that we have a 52-week high on it. So what did it do for the week? Sideways. What's our overall trend? Well, we certainly have been in a long-term uptrend. Got some cooling of that trend as we got into the summer, but still got our higher high here in the month of September. Some jitterousness always in the month of October, as that is a month that can give us volatility. Looking at the SPX on a shorter term scale, looking at the 5 days, we see we basically ended somewhere pretty close to the high of the week. Didn't quite make it, but nice little pickup there on Friday as we closed out the week in the market. Going sideways with the government in a strike, basically. Looking at the Dow, we see that Dow is the weakest of all the markets, and we see it pulling back well below the 50-day moving average, sitting near the bottom of its Bollinger Band. Are we going to hit this 200-day moving average? It certainly seems to try to get there as we're watching this show the weakness of all the markets that we have. All right, looking at the NASDAQ, look at that. 52-week high hit right there on Tuesday, and we see we closed very close to there on Friday as the market rallied going into the weekend. Looking at the Russell, the biggest gainer of our indexes that we watch, we see that it's been going sideways for quite some time. Watch this index. It many times gives us an indication of when something's going to happen, either to the upside or to the downside, and many times is the first to move. Well, with all of this stuff going on in Washington, what is it that we would expect the VIX to be? Well, it is that. We see that the VIX did a big peak on Thursday, went almost up to 19, and we see that we're still sitting there at our upward range for the last 3 months as we look at the VIX showing volatility in the market, which should help those premiums for those of you that are option sellers. And now taking a look at the other sectors, taking a look at bonds, we see TLT, our ETF for bonds, showing us just going sideways, just like the market, not showing us a whole lot going on. So this bear market industry in bonds hasn't showed us a thing in the last week. Looking at gold, October typically is a down month for gold. Historically, we'll see what this does. As we see, we're below the 30, below the 50, below the 200, and we see we've had quite a pullback from gold from its previous highs. No big rush to safety in the gold market. Looking at what kind of volume we had big volume. The biggest volume took place on Thursday as we had our pullback, and here we hit that 30 and 50-day moving average and got our bounce. So our bounce up, there's our high for all time. And we're very close to that as the market has had a bit of a pullback with the government shutdown, but doesn't seem to be too much fear placed in the market because of it. Looking at XLF, our ETF for financials, we see that it also has pulled back to the 30 and the 50-day moving average and sitting there struggling to move up higher, and it will if the overall market begins to move back up. October 17th is, I believe, the key date that we're looking at for government shutdown and another step. Looking at oil, we see that oil has continued its bit of a downtrend. Had a little bit of a move up this week, up 30 to 37.31 in USO, but still below that 30 and 50-day moving average. And finally, for those of you that are gold members, stick around. We'll go look at our stocks to watch, see what they did during this last week, as the market basically went sideways, ended basically where it started. So we'll see what these stocks did relative to the overall market. Look for our biggest movers. Look for those stocks that just keep showing strength no matter which way the market pulls. Those are your horsemen. Those are the ones that keep right on running. So for those that are not gold members and you're interested in other free videos from Options University, you tune in at the end and there will be a website for you to visit if you'd like to see other free videos from Options University. In the meantime, this is Market Forecast on Monday, October 7th, 2013, brought to you by Options University. And this is Butch Shorak telling you to trade what you see, not what you think. Thank you for being here.